We have a massive housing crisis in America. It feels intractable. But what if a real solution was hiding in plain sight? What if the very institutions we think of as just lenders, banks, could be part of the solution? We're going to dive into a pretty radical idea. What if banks didn't just finance homes, but actually built them?
To really get a handle on just how bad things are, just look at this number. In January 2024, on one single night, almost 750,000 people were experiencing homelessness. And get this, that's an 18% jump from the year before. Rents are soaring, pandemic protections are gone, and the crisis is getting worse fast.
You know, this isn't just about statistics. This quote really hits home because it speaks to the human cost. When people can't find a stable place to live, it just chips away at the very foundation of their lives, and really, at the country as a whole.
So how do we start to think about fixing this? Well, in this explainer, we're going to walk through 5 key parts. We'll start with the crisis itself, then look at the programs we already have, pinpoint a hidden legal barrier that's holding us back, and then we'll explore this bold new idea and what it could really mean. Okay, first up, let's really dig into the scale of America's housing crisis. It's so much bigger than just homelessness. It affects millions and millions of families who are just struggling to keep a roof over their heads.
And this right here, this is a really shocking piece of the puzzle. We're talking about more than 7 million extremely low-income households that are considered severely cost-burdened. What does that mean? It means they're spending over half their income, just on housing. Think about that. There's barely anything left for food, for healthcare, for life.
Now, you're probably thinking, wait a minute, don't we have government programs for this? And yeah, we do. But as we're about to see, what we have is more like a patchwork quilt trying to cover a king-size bed. It's just not enough.
The 2 main tools in the toolbox are the Community Reinvestment Act, or CRA, and the Low-Income Housing Tax Credit Program, which you'll hear called LIHTC. So the CRA basically nudges banks to invest in underserved areas, and LIHTC gives tax credits to private companies to try and get them to build affordable rental housing.
But here's the real issue. With LIHTC, those affordability rules have an expiration date, and pretty soon, hundreds of thousands of those units could just flip to market rate rent. As for the CRA, well, banks can't build houses themselves, so their money has to flow through all these middlemen, which is super inefficient. Plus, almost 90% of banks get a satisfactory or outstanding grade anyway, so there's not a huge incentive to do more. The bottom line is this: neither program is actually creating new housing at the scale we desperately need.
So if the programs we have just aren't cutting it, what's stopping us from trying something more direct? Well, it turns out there's a huge legal barrier in the way, a law that was written for a totally different world.
And this is the absolute core of the problem. It's the legal separation of banking and commerce. Basically, a law from way back in 1956, the Bank Holding Company Act, created this wall. The idea at the time was to keep banks from getting too powerful and taking on risky side hustles. But an unintended side effect today is that it literally forbids banks from building houses. And this diagram just lays it out perfectly. The banks have the money, but because of that legal wall, they can't put it to work directly. So the money has to snake its way through all these middlemen, syndicators, other financial groups. And you know what? Each one takes a cut, and each one adds another layer of complexity. By the time the money actually gets to a developer, the whole process is slower and a lot more expensive.
Which brings us to the main event, a proposal to knock a very specific, targeted hole in that wall. Let's take a look at what this new, much more direct path could look like.
The idea itself is simple, but its impact could be revolutionary. Just amend that old 1956 law. Let the big bank holding companies, the parent corporations that own the banks, create special, heavily regulated subsidiaries. And the one and only job of these subsidiaries would be to develop, build, and manage affordable housing directly. And here's what that new path looks like. See? It's a straight line. The bank's housing subsidiary funds and builds the project itself. All those middlemen, they're gone. The result? You get affordable housing built faster, cheaper, and a whole lot more efficiently. And listen, this isn't just some theory cooked up in a lab. There are actually a couple of states that are already kind of doing this. Virginia lets its state-chartered banks put up to 5% of their assets into real estate. Michigan lets them go up to 10%. So these states are basically proving that it's possible to manage this kind of direct investment safely.
Now, of course, an idea this big, this disruptive, isn't without some serious risks. So for this last section, let's put the incredible potential of this idea on the scale and weigh it against the very real dangers we'd have to navigate.
The potential here is just staggering.
Some estimates suggest that this one change could unleash enough capital to create somewhere between 100,000 and 300,000 additional affordable housing units every single year. That's not just an improvement, that's an absolute game changer.
Okay, but what about those risks? This chart lays them out, along with some proposed solutions. The big one, financial instability. The safeguard, make sure all the development happens in separate, well-funded subsidiaries that are stress-tested. What about mission drift, where a bank starts chasing profits instead of building affordable units? You'd need strict, ironclad affordability rules that can't be bent. And to stop big banks from becoming bullies, you'd enforce strong anti-tying rules, so a bank couldn't, say, deny a small business a loan unless they use the bank's own construction company.
And so that leaves us with this one fundamental question. Is it worth rewriting a core principle of our financial system, one that's been in place for nearly 70 years, to solve one of the most urgent crises of our time? The answer to that could reshape our cities and, more importantly, the lives of millions of people.